is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, since the last time we spoke, a bad market has become worse, and it is something that I think a lot of people are experiencing, regardless of the asset class you're in. NASDAQ is in correction territory. The S&P 500 briefly touched that level yesterday. It has bounced modestly, but I think the consensus is that we're not out of the woods. It seems to be that macro is driving a lot of this, the Trump trade war, the realignment in the world, and the ensuing uncertainty has had the VIX at a high that it has not seen since August of last year, and just a general feeling of uneasiness in the markets. And now it feels like a perfect time for us to talk to friend of the pod and previous guest, Tom Dunleavy, who has always got really hot and well-researched, and well-reasoned takes on Twitter about what the heck is going on in the world. So if you are a listener of the pod, you'll remember that Tom is a partner and the chief investment officer at MV Capital, where he oversees a $20 million venture capital fund in the crypto space. The fund has invested over 30 projects since 2021 and evaluates over 1,000 projects annually. He's also an active angel investor and advisor for Web3 projects. He's also someone that is relied upon for his take on the market. He's been featured in Bloomberg, Yahoo Finance, Forbes, and many other publications. He, like me, has straddled or sort of has a 1 foot in the traditional finance world, one foot in the crypto world, and is able to bring some of what I think is sort of rigorous, TradFi and analysis to this emerging asset class to help people kind of make sense of it. So, Tom, we're very grateful to have you back. Welcome to DeFi Decoded.
Thanks for having me again, guys. Great to see you.
Good. So, Tom, what's going on in the world? Tell us.
Oh, man. Well, if you're an active and liquid crypto investor right now, pain is what is going on. That's what's on the menu. And as you mentioned, traditional markets are feeling the same way, right? Down almost 10% across the board. If you were following what Trump did in his first administration, this is almost the same playbook, except he's ramping it up to 10. So at the initial outset in 2017, we had a sell-off the first few months in the S&P, the Russell, Bitcoin briefly, yield sold off, dollar down, and then we had an immediate reversal of that by about January. So he is certainly ramping up those efforts with much sharper tariffs, much sharper rhetoric this time around, in coordination with the efforts for Doge to cut a lot of government spending. Government spending within the U.S. is 25 to 30% of GDP. You have really strong growth concerns throughout the market, and that is affecting the trajectory for a lot of growth stocks, risk assets, crypto being the primary risk asset. And when we have these markets and where most market participants express their view on high beta and high risk assets through very directional long short trades, you're going to see a lot of pain. Now, this is putting aside all of the very positive developments we've seen on the crypto side. I don't need to go into each detailed regulatory win we've had, including a number of direct placements in all of these agencies that affect policy change. All of those are very positive for the industry. And I often joke, if this industry was private today, rather than having daily mark-to-market prices, and we would be trading like SpaceX that has their valuation marked up in the secondary markets 2x every few months. So still very positive on the industry and everything that's happening, but the market noise, particularly around the tariffs, particularly around a lot of the policies Trump is taking a hard line on, are going to be challenging for the short term.
Yeah, I mean, I think that crypto was sort of the darling of the Trump trade basket after he got elected and before he was inaugurated. It was one of the most euphoric periods that I can recall in the asset class. Everything was moving higher in lockstep. And since then, everything is sold off. But to your point, there actually has been some news that has, I think, demonstrated that this administration will abide by whatever commitments and promises that it made during the campaign, right? I mean, we've seen the creation of the strategic Bitcoin reserve, the repeal of some anti-crypto laws, including stuff that passed in the Congress, which I think is pretty meaningful. And obviously, as you pointed out, the appointment of all these key people, the new SEC chairman, the head of the Commerce Department, the new Treasury Secretary, the crypto and AI czar. So it seems to be kind of hitting all of these notes, right? I mean, there's all this good news. And yet, with the exception of Bitcoin, everything is lower, pretty much, other than I guess XRP and a couple of these others, than it was, on Inauguration Day. And I guess I'm just trying to reconcile that. I mean, I think a lot of it is macro. I think part of it is that maybe Trump has undermined some of his credibility in this area. He launched World Liberty Financial last year, which is a crypto project that has helped to make him and his family wealthier. And then obviously the Trump and Melania coins, which were disasters. I mean, they're down 90% since launch. So I don't know, maybe I'm overanalyzing that part of it, but I think a lot of people are concerned that, like a lot of things, this is a project that's sort of a personal money-making opportunity for him and little else. And if he can get some stuff done in government, that's kind of incidental. What do you make of that?
So I think those things are sideshows to the main story, which is all of the important government regulatory and other reasons that, Bitcoin is now the star of the show. And Bitcoin has truly become a global macro asset. I mean, BlackRock the other day just put in a direction up to their financial advisors to have 1% to 2% of Bitcoin in their model portfolios, which control multi-billions, approaching $1 trillion in assets. Yeah. So that is a significant show of confidence. And if nothing else, Bitcoin is a fantastic money-making opportunity, and crypto is a fantastic money-making opportunity for traditional finance where you're fighting over basis points. So the asset class itself is going to continue to grow because a lot of things we like about it, but also because a lot of the money-making opportunities. So TradFi sees those money-making opportunities. Trump absolutely sees those money-making opportunities. Unfortunately, he's gone for some of the cash grabs, which is the meme coin stuff. I think World Liberty Financial, while it does some kind of shady backroom deals, is fundamentally trying to do some things on Ethereum around borrowing and lending and owning assets and having a long-term view there. But, the real way Trump is likely to judge himself along with the stock market is the price action of Bitcoin. Now, I think he's been coached by Besson and others that, guess what, if you really want to have tariffs in sort of equal footing with a number of these countries, if you want long-term yields lower, if you want to solve the deficit, you're going to have to experience some of the short-term pain. And that's what we're going through right now. Now, I'm in the camp that a lot of this pain actually is short-term, which will be a month or two, because the pain we're enacting on our trading partners in Canada and Mexico is much higher than it is for the American public. Now, their exports to us are much, much higher than we're exporting to them. So what could hurt Americans is inflation due to these higher tariffs if the price of goods is passed along to the American consumer. Now, we just saw an inflation print this morning as we're recording on 3/12, and inflation numbers are down month over month across the board. A lot of things that aren't directly attributable to tariffs, like shelter, et cetera, energy prices, some part tariff related. But that just gives Trump more ammo to continue to press the tariffs because the inflation numbers are fairly tame. So I think you're going to see a very sharp pushback by the Trump administration to keep these tariffs in place until they get what they want.
Yeah, I think
risk markets in the short term.
Yeah, I think the one thing you have to take into account, though, obviously, though, is at least for Canada, and the tariffs have led to the Canadian dollar sort of falling pretty significantly, which then sort of makes Canadian exports more competitive, even with the tariffs. So there is like a bit of a mitigation effect there. Another thing too is, at least in Canada, from what I can see, it's extremely politically popular right now to push back on tariffs, and I don't see that sort of changing in the next 2 months, given that we're very likely going to have an election in about end of May, or early May.
Well, we'll see about that.
Yeah, we'll see about that. I mean,
for our American audiences, like, an election has to happen by law by October. And so the question is whether the prime minister will call an election earlier than that. Most people are saying that he will. because he's unelected at this point, which is how it works in a parliamentary system. So he has no mandate from the people. So if he wants to lead the country, he should probably have an election. And if he doesn't, he has to do it by October.
Yeah, and our elections are typically 6 to 8 weeks long. So the general consensus is that Carney is going to get sworn in as prime minister in the next couple of days, and then the rumors are that the first thing he's going to do is sort of call an election. Yeah, just because the polls have shown Liberals making a big sort of comeback.
Does he have the Does he have the actual votes to make that happen? Or I'm assuming he'd only call an election if he had the votes.
No. So he can call the
yeah. Go ahead.
Yeah, he can call the election whenever. So essentially, and even if he doesn't call an election, the opposition has the votes to force an election through a non-confidence vote. So pretty much no matter what, we're going to be getting an election pretty soon, I think. And just from what we've seen, it's been very politically popular, whether it's rational or not. Like Doug Ford, for example, who was the guy who sort of was pushing the surcharge for electricity. He just got elected with a third straight majority just a week and a half ago, 2 weeks ago, and partly because he was seen as someone who was very strong on tariffs in terms of. So I would just say, like, overall, I'm not sure that there's going to be, at least in the next 2 to 3 months, political will to sort of back off on tariffs.
I don't think there's ever going to be political will to back off until Trump backs off. Like, the difference between, not to turn this into a politics podcast, the difference between Canada, Mexico, Europe is that Trump doesn't want to annex Mexico or Denmark, right? Like, that there's a big difference. And until he says categorically that that's not his aim, or the Congress forbids him from doing it, Canada will outlast the United States, Tom. You got to understand this. Like, in the United Kingdom, beef rations did not come off until 1954. So the people were willing to go without beef for a decade after beating the Nazis. When it's your home country, you're always going to outlast the group that's trying to bully you. And I'm not trying to equate like war to what's happening today, but like, Canadians, if given the choice between enduring hardship or getting steamrolled by the US in some unlawful takeover, are going to take the hardship. And they're not going to take the hardship for 3 months. They'll take it for a decade or longer. So I think that the American consumer, even though the impact on trade is more modest for the US than it is for Canada in this relationship, Americans are far less prepared for any kind of inconvenience from this. So if the country goes into even a shallow recession, or prices go up even a little bit, and cars cost a couple $1,000s more, that is going to appear in the political favorability numbers very quickly. And the way your system works is that you've got midterm elections, which people are already campaigning for because they're like 18 months away. And it will become an election issue for you, a political issue for the US, way faster than it becomes a political issue in Canada. All parties in Canada, everybody wants this thing to be over. Everybody loves, but by and large, thinks it's a good relationship. We have tons of friends on the other side of the border. Tom, you're one of them. But people in Canada, like, it's like any country. Like, you get your back up, you drop the gloves and you're going to fight. You're going to fight to the death. And that's what's going to happen here, unfortunately. So, like, I think the consensus is like, we need an off-ramp. I think Andrew's correct that, it's very, my wife actually had a funny thing. She's like, Doug Ford raises the surcharge on electricity. And for Canadians, it's satisfying in the moment, but whether it's the right strategy in the long term is very debatable. It's sort of like when your kid does something wrong and you raise your voice at them. At the moment, it's very satisfying, but afterwards, you're probably going to have to deal with like cleaning up a mess, right? So like, we don't know. I don't know whether or not this is the right strategy. I'm just telling you, like, the mood north of the border is like, people are they're on a war footing. So I just don't see it ending anytime soon. So I think that your guys got to back off. Otherwise, I think if you're looking for the impact on markets, it could go on for a very long time. That's my point. Bring it back to the market.
Yeah, I think that's a lot of tough talk and not really a lot of follow through, to be honest. And that's 42% of Canadians actually are in favor. 42% of Canadians between 18 and 34 are in favor of becoming the 51st state.
That's false. That's not true. That's not true.
I just looked it up yesterday. Yeah, I did look it up. In Canada's
Tom,
GDP per capita.
I'm telling
No,
you.
Tom's talking about the under 35. I think I saw that poll
Yeah,
too.
under,
Because generally,
under 35 cohort.
yeah. So generally, it's 80-20 or something 85. But I think I saw some poll that poll was off though with other
90% of overall Canadians though aren't in favor of becoming the 51st.
Yeah, it doesn't. Also, another thing you have to keep in mind, not to make this a
mathematically
random.
make any sense. A third of the population is under 35. So how could
I
half
don't
of
know if
them want to be?
it's not. It's a third. I think it's like a third of the under 35s. No, Tom is right though. The under 35s, I remember looking at that poll, were far more in support. The only thing that doesn't make sense, not to make this, is it doesn't make any sense for Canada to become a 51st state because it would make the U.S. far more left. Like it doesn't.
I totally agree. I don't think it makes any sense. All I'm saying is I think all this tariff noise back and forth is a lot of posturing and tough stances by both sides that will be resolved with cooler heads in the short term.
So actually, sorry, Tom, there is this, I want to say conspiracy theory, but there's this idea that Trump is playing 4D chess, kind of playing like chicken with the Fed and trying to essentially create a trade war and create enough uncertainty that, tanks the economy, tanks at least business confidence to sort of force the Fed to lower rates. We've also heard now multiple times, actually, Trump's talked about the U.S. running a surplus, which is kind of unheard of, or at least a balanced budget. And obviously the easiest way to get there is, besides Doge cutting tons of government spending, which I'm sort of doubtful we'll be able to cut that much, the easiest way by far to drive down the deficit is having lower interest rates. So is this like some sort of big brain move in your view, to sort of get the Fed to flinch?
I think people like to ascribe these crazy 4D chess moves to Trump when there really isn't much behind it except some good advice from his advisors that here's directionally what we should be doing. And those two things have been expressed as yields and lower dollar. So, I think these 4D moves are just too far out of context for Trump. He's a showman. He's a politician. He talks tough. And I don't know that there's any long-term rationale behind it. Like, the annexation of Canada, right? I think in Greenland it started with. I think someone put in his ear, global warming is increasing. We're having increased ability to, and we're spending a lot of money to police the trade routes in, the northern part of the globe. Great. Why don't we just annex Greenland? We can get the territory. There's some, natural resources there. Fantastic. Oh, great. Who has better natural resources than Canada? Oh, great. Let's add them too. Like, I think like someone put that in his ear, gave him a research report about it, and he just like takes it and runs with it. And that's sort of it. I don't think there's 4D chess going on. I don't think he has the capacity for it. He's a smart guy, but I don't think that's his game.
According to the recent poll, 85% do not want to be 51st state. 9% do, which was a little higher than I thought, Tom. And then for the age group, 18 to 34-year-olds, 17%. So higher than average, but not 42. So
4 in 10 Canadians, according to Ipsos, ages 18 to 34, would vote.
This is according to a poll by Leger, Leger, released this week. So anyway.
Oh, interesting. Yeah. Actually, this Ipsos poll is 43% 18 conversion of assets to US dollars. Huh. Okay, well let's sort of bring it back more to crypto though. So what's kind of like I guess what's the impact of all of this on crypto over the next kind of 3 to 12 months? Is this like I feel like a lot of people in the sort of crypto sphere are talking a lot about how macro is essentially the thing to watch out for. And there's sort of like a counter theory of like, let's focus on products with real revenue. Like this is the time for fundamentals to maybe outperform because, fundamentals in a lot of ways are kind of like a floor on valuation. So I guess I'm kind of curious about like what your take is, I guess, both just how do you think macro is going to impact over the next sort of 3 to 12 months? Is it going to continue to dominate? And then what does that say about like specific subsectors within the sort of crypto ecosystem?
Yeah, I think we just need macro to get back out of the way. And then the fundamental news that's happened over the past few months would be reflected in the prices, particularly around the ETFs and further ETF adoptions, potential staking ETF for ETH, futures launching for Solana, Solana ETF later in the year, etc. I mean, the name of the game is flows for crypto at this point. Anything that drives flows are going to be immensely important. So right now, flows and liquidity are being sucked out directionally by a lot of the macro related news. We've all seen the charts of global liquidity in Bitcoin. As the dollar lowers, as the US and other countries have to stimulate their economies, we see a flow of liquidity, and that's directly positive for crypto prices. That is going to happen once this tariff related news is out of the way. So that is the start of the show. Totally agree with folks here.
I can see a scenario where cooler heads prevail. The tariff news is out of the way for the time being. The Fed, based on a modest print today on inflation, sticks to the program of cutting in a steady, orderly way, where the economy weakens enough that we get rate cuts, but not so much that we enter a recession. And so macro becomes like a neutral factor in the market. It's not positive, it's not negative. So assuming the neutral factor of the market, then there's all this other stuff that gets piled on top of it. And I'm really curious, what's interesting to me is the diffusion of outcomes so far in different crypto assets. Like the fact that Bitcoin has done very well as the sort of poster child for this asset class, even despite a pullback. The pullback in Bitcoin is frankly more modest than it is in most Mag 7 stocks, right? So it's not like it's altogether, surprising given what's going on. But everything else has been taken to the woodshed. I don't think a lot of people thought, all of these DeFi, the IRS DeFi law gets revoked, the case against Uniswap gets dropped, Ether staking ETFs are likely to be approved, as are altcoin ETFs. In that, we get a crypto and AI czar and a pro-crypto head of the SEC and a pro-crypto treasury secretary, and they run the table. In that scenario, the ETH would be under $2,000. I don't think many people would have expected that, frankly. I certainly didn't. And I'm not sure Andrew did either. So let's say we are in a neutral, the macro's neutral, and the fundamentals begin to kick in. What does well in that environment?
So the aggregate crypto space, if we bifurcate it into majors and altcoins, the majors are all going to have ETFs, which are going to capture a lot of the traditional finance flows and flows by folks who previously maybe threw some money in Coinbase or punted around on chain. It's going to gobble up all those flows. So who buys the longer tail of all of these altcoins? Mostly liquid funds, and then potentially through some easier off-ramps, some more speculative investors. And that's really the challenge with the entire complex outside of everything that doesn't have an ETF for the next year or so, because all of those ETFs are going to gobble up the flows, especially when they're in these blended products by Bitwise and others who make these indices. It's just very easy to say, if I want exposure to crypto, let me just go buy that thing. And that's where the flows come in. Now, it's much easier to move the altcoin space. And so what drives the flows into those altcoins? Now, I think they're primarily going to be driven by buybacks through the next year or so. So tokens that have the ability to buy back their token through their revenue, which is going to be the mechanism which I think they primarily do that by. So you've seen this in some form or fashion through a lot of the DeFi protocols, which, I was bearish on DeFi probably for the last 3 years, and that's flipped in the last 6 months or so. With the new administration, we're going to see a lot more positive regulation that provides clarity to what these folks can do with their tokens. But you're going to see direct buyback of their tokens through the revenue they're accruing through a lot of the trading activities. So if there is an increase in total volume, the flows are probably going to go to the majors, but all of the on-chain activity and other transaction activity will be felt by these DeFi platforms, then bought back in the form of a lot of their tokens.
Interesting. Yeah. Andrew, you've talked about that before, in relation to Ethereum and other projects where there's a good issuance model and a bad issuance model. And some of these projects where there is a buyback mechanism seems like a good idea. It's if you own shares of Apple and they're using excess earnings to buy back and retire stock, then your earnings per share will increase even if earnings aren't going to grow, right? So that seems like a good thing if you're owning an individual share of that company. But I don't know. I mean, I'm sure Tom's done more research on this than we have. If you look at the actual price performance of a lot of these assets, XRP and ADA and some of these other things that have been the biggest beneficiaries of this all of
Flight
this
to
stuff
quality.
Trump's doing. What's that? Flight to quality. But like, it isn't the names that are burning and retiring tokens. It's stuff that, I don't know, they're attracting capital flows, like, for lack of a better word, right? So I just, I wrote about this last week, and I really go back and forth on, the idea of crypto fundamentals and what things should be valued on. And Benjamin Graham said, in the short term, the market is a voting machine, and in the long term, it's a weighing machine. And so maybe right now, people are voting with their feet and buying stuff, but in the long run, the cream of the crop is going to emerge, and figuring out like how to value those things. So it's maybe these are related topics, Tom, because you said the buyback is itself like a fund flow, right? It's a bid in the market for those underlying assets. How do you think about the fundamentals just as a whole?
The fundamentals of L1s versus the fundamentals of, let's call them applications more broadly, I think are distinctly different. L1s are effectively commodities where the cost will trend towards the cost of production, which the cost of block production is effectively electricity and computing power off a distributed network, which is, let's call it zero. So what are the long run valuations for L1s going to be? It's just going to be in the ability for block ordering and effectively MEV, right? The ability for actors who want transactions first or more profitable or whatever to have that ability to do that, and then some level of monetary premium on top of it, which you can assign to, I don't know, some tangible value for brand, for whatever. Like, I own Ethereum because I like the Ethereum ecosystem and I don't know which tokens to buy. I just buy Ethereum or whatever, or I need for gas more broadly, but that's sort of going with account abstraction. So, for those L1s, I think there's a very distinct sort of valuation model, which has been debated ad nauseum, but I think that's sort of where we're settling. And it's been my position for quite some time now. On the other side, in terms of like, what can we generate in terms of revenue for these applications? It's very clear, at least on the DeFi side, that is driven through volumes and fees, which, folks are seemingly willing to pay some level of transaction fees, basis points. I mean, percentages points right now on some platforms, with basis points in the future. And those level of volumes can continue to increase. So, the real challenge there is very much like a traditional analysis. Okay, is the revenue growing? Is the user base growing? And are these metrics sustainable in the future? And then you can do some level of competitive analysis. I think the revealed sort of preference of the market is that, and this was not my view a few months ago, like I would have never saw Hyperliquid coming. I thought we had plenty of perp dexes, but the user experience for these things really is a differentiating factor in actual growth for these platforms. And the user experience is still so poor. There is the ability for a lot of these platforms to improve it. Yeah. Outside of that, there's a lot of, I think, experimentation at the app level. I point to like Kaido being a real, new, interesting business. And for those out there who haven't been following, it's effectively like a social scoring metric, which then products or protocols could use to find essentially and direct flows to their best marketers. And you can build a lot of content on top of knowing who is, who's socially within whatever ecosystem you're looking at is high signal. Right now, they just have that on Twitter, on crypto Twitter. You can imagine them easily extending that to, TikTok or YouTube or whatever, and doing it outside of the crypto space and being a really powerful engine for a lot of businesses. But in terms of other experimentation at the app level, it's still few and far between. ETH Denver, this was the entire conversation. Every person I talked to, over 100 people, same conversation. It's like, where are the cool apps? What are we doing here? And most of the focus was like new AI agent, very myopic specific thing within that space, or hey, new L1, Barachain, Monad, movement, etc. Or DePIN. There's a few things there, but like it's sort of everyone's trying to find themselves still and trying to find that user application that's kind of interesting and really going to drive like more fees and revenues above just trading. That's it. It's been trading.
Yeah. I did want to actually just quickly DePIN was one of the, because I was in ETH Denver too, and there was a lot of people talking about DePIN. I unfortunately missed the sort of like DePIN meetup. Just curious if there's anything, it's not something we actually talk a lot on this pod, but just curious if there's anything in that space that's interesting to you. And also if you can just give like a quick, I guess, background on what DePIN is.
Yeah, decentralized physical infrastructure networks. So these are either physical or virtual devices that enable broad distributions of decentralized networks. So that could be latent compute capacity, it could be mapping, it could be location, could be whatever. The interesting thing about DePIN is, unlike most things in crypto, there's actually a use case for the token because the token is used to incentivize and distribute the network for participants more broadly. So, like if I want to have everyone run a decentralized Google Maps, guess what? I could pay them in tokens. It helps localize and meter the demand that you can actually have and direct towards these networks. Now, in terms of interesting projects, there are a lot you've probably heard of. So, Helium, HiveMapper, Demo, the most successful ones. A lot of other interesting use cases are emerging. So GeoDNet just received a huge amount of funding on the secondaries market from Multicoin and a few others. They do down to the millimeter, essentially, like location specific data, which you can imagine is pretty useful in the sort of internet of machines and things kind of era. Silencio, which is a project that we invested in, captures noise level data, which they can resell to Airbnb and hotels.com, apartments.com. Real Trojan horse play of using every sort of piece of your device to, build a centralized network and then resell those unique data sets. Number of other examples, but more broadly, DePIN's interesting because it has the ability to use token incentives to incentivize distribution of a network, solve the cold start problem, and meter on local demand. When these large incumbent players who would be competing against a lot of these networks cannot.
Yeah,
that was a lot. So
no, but that was it was good. DePIN, so we had the guys from HiveMapper, Akash, Render, I think, on the show in the past. So I think we've had our share of DePIN founders, and yeah, I mean, it's a very appealing concept, especially as it relates to AI, the fact that we can marshal all this computing power together into these decentralized networks and incentivize people who are part of that and, create alternatives from hyperscalers and, add more capacity for training and so forth. So to me, that particular use case, I find quite appealing. It doesn't seem intuitively that that's having a big impact so far. I think, if you're going to build and train a model, you're probably still working mostly with big companies, but a lot of innovation starts on the margin before it moves into the mainstream. Yeah, go ahead.
Sorry to interrupt you, but here's the problem here, and this is what most decentralized physical infrastructure and most crypto companies are running into now, and you've seen this with the Ethereum Foundation. Crypto, while being decentralized at its core, has its advantages, has distinct disadvantages in organizing people and doing very basic things that businesses need, like business development and organizational strategy. So this is where a lot of these have failed. Business development, marketing, and organizational strategy. So Akash, Render, all those are great examples of potentially the ability to provide sub-level of service up and above what AWS and Google can provide. But the problem is their business development arms are not as developed as Google. No one gets fired for choosing those services, so they don't really see the advantage of going with these guys in the incremental sort of steps. So they need a marketing arm, a business development arm, and all those things to sort of do the traditional sales cycle if you're selling to these bigger customers.
Yeah, we used to say that decentralized doesn't mean disorganized. But maybe it does.
It does. It really does.
Yeah, it's someone was decentralized systems definitely don't work as quickly. So some smarter person than me was talking about there's all these internet standards that haven't been updated since 1993 because there's no company that's got an incentive to do it. It's just sort of managed by a committee, which maybe is really great when you're talking about protocols that everyone can use and access, but not so great when you're trying to build a business, right? What about AI? Decentralized AI was a theme that really caught on. It seemed like a lot of AI applications, the on-chain AI was sort of like glorified bots, basically, that could, do some interesting stuff, like maybe trading bots or, automated Twitter accounts and things like that. But the idea of AI as a user of crypto is intuitively very appealing. The idea that, machine learning is going to need sort of machine money or whatever. And that, AI can't open a bank account or start a company or sign a legal agreement, but it can create a DAO or have a wallet or earn money in stables or whatever. So is that something that you think is going to start to have an impact on the market? Maybe Solana benefited a little bit, like in the first part of Q1, because of the big sort of wave of excitement. I'm wondering if that's sustainable, where you might see that pop up in the market.
So I think the idea of crypto being the rails for the future of AI is really an interesting and compelling sort of thesis. The idea of building crypto native startups on top of that, I'm not sure we have the expertise in the space to do it, frankly. It's very, very complicated, and we're already at the cross section of cryptography, complex economics, and we only have a handful of people in the industry. So I think there are going to be interesting use cases built on top of and leveraging AI through a crypto. It just seems like really early days for me. Like all the AI related events at ETH Denver, I was expecting some new cutting edge technology, thinking about inference differently, or training models or whatever, doing something different. But it's just a lot of it's happening at the AI agent layer, which we've seen from a lot of these bots, from AI16Z to Cerebro to whatever name your next one. The moats really are not that deep, and the actual step changes in technologically advances and through these teams is pretty minimal to date. So I don't know. I think there's something there. I think it's early days, and it's really hard to suss out what it is. So
let's sort of broaden out again. I think it was last time we had you on the pod. You had some sort of 2025 sort of predictions. You had 250K Bitcoin, 12K ETH, $700 Sol. And so, I was just kind of curious, what do you see? Obviously we kind of talked about the next 3 months, next 3 to 6 months. I think it's pretty clear that, we kind of all agree that there's going to be some sort of rockiness, but the macro is going to sort of tamp down a little bit as a headwind. I'm just kind of curious, what do you think the end of the year sort of looks like? I guess, how do we get to, first question is, do you stand by those calls? And then I guess second question is, how do you sort of see the year playing out to get there?
I think Bitcoin, so let's start with, in terms of market corrections, in terms of the S&P, a 10% correction, particularly at this time of the year due to seasonality, is actually extremely common. So if this tariff news rolls off, like I said earlier in the show, I think we're going to be fine for the next year, especially if we're seeing more stimulus, etc. Now, as it relates to crypto, I think Bitcoin has a very strong put under it, not only due to the government, because of the ETF flows, because of the model portfolio inputs by these big allocators, because of the RIA flows that are still incoming. I think that extends to ETH, but I think, frankly, I was underestimating how much, or overestimating how much that extended to ETH so far. And these internal problems, at Ethereum and the infighting is really having an effect on the price. I thought the flows would outweigh that. So far to date, that has not been true. So I think there could be some really interesting catalysts for ETH later in the year through Mega ETH and sort of putting it on par with Solana. But that's the prediction that I really am having the most, that is most in question right now for me is, man, can ETH really do it for here? Is it really just going to become, sort of the legacy system and Solana and all these faster Monad and whatever else is launching this year become sort of the next step? So confident in Bitcoin, less confident in Ethereum. Now I would probably mark that prediction down pretty drastically, which maybe that's a bottom, because I've been an ETH bull for a long time. So maybe this is finally the capitulation event. I mean, you've seen people on Twitter do the same thing.
A massive ETH bull I just talked to said that it's not a buy till $1,200, and I'm like, what? These are people who are like, yeah, I know, Andrew. I'll tell you who it is after the show. He wouldn't want me sharing this on there.
But I think you have these really weird, noisy events within markets that really color our view as well. Like you have these ridiculous liquidation events that you wouldn't see in traditional finance for these major assets. And you have very sophisticated market actors who target and liquidate a lot of these players. The large majority of borrowing, lending, trading, especially on the leverage side, is still done through Ethereum, right? Hyperliquid's on Arbitrum. So, and a lot of that's denominated in ETH. So when you see a lot of these liquidation events, I think it has a very distinct price distortion event. And once that money is kind of carried out, it's really hard to get it back in. So I think that's a real challenge for Ethereum right now. So that one's tough. I think Solana, honestly, $600-700 is still firmly on the table. We're having this new upgrade where it's reducing inflation. You're gonna have Fire Dancer coming. I think while folks give meme coins and the volumes through that Solana drove through there a lot of shit, rightfully. What it did is battle test the network, right? They were doing tens of billions of dollars a day in volume and having no downtime. And this is for a system that folks were making fun of for going down every 10 minutes, right? Or every few months, whatever. Hasn't been down for over a year, handled tens of billions of volume. I think it's really come a long way. And I think that really is going to be a lot of the rails that see a lot of this DeFi activity going forward. So, Radium, Camino, all the folks in DeFi that are going to benefit from that, I think are super interesting from our view. No specific names we have exposure in yet, but I think you can see how a lot of those get a ton of volume there. So, in short, Bitcoin feel good about, Solana feel pretty good about, ETH, not so much. Not so much right now.
Yeah. Interesting. We could keep going here. I was just thinking, there was a time when cryptos had a beta of 1, pretty much. Like if one thing went up, they all went up. And now we're starting to see certain names outperform. And in the case of like the L1 debate, the notion that like the Ethereum might go down, but others could still prosper, I think is pretty alien to a lot of people, but who have been in the market and sort of seen the way it's played out in the past. But in the real world, that would be the norm, right? Like the norm would be, for a time, Yahoo was the number 1 search engine in the United States and around the world. And it was the biggest internet company on the stock market. And it didn't end up winning because that's what happens sometimes in business, right? Being first helps, but it doesn't mean that you're going to be victorious in the end. I don't think that's necessarily what's happening here. I'm just saying like this is not without precedent in the real world.
Yeah, I hope Ethereum is not Netscape Navigator. Let's put it that way. Or BlackBerry or whatever. But, I just have a really hard time believing if crypto actually does do a, 3-4x in aggregate this year in market cap, that Ethereum doesn't meaningfully participate. But
yeah, but it could underperform, as you say, right? Like,
yep, absolutely.
Yeah. Cool. Andrew, do you have any other questions for Tom?
Yeah, I think I just wanted to talk really quick on one other sort of one of your predictions was like a return to fair token launches. We've talked a lot on this pod about I would say somewhat against our will. We've talked a lot about meme coins, pump.fun, and how this was like, in a lot of ways, meme coins were, kind of at least a more fair way of launching a token, at least initially, compared to last cycle where we saw tons of VC funded projects launching with extremely high FTVs and extremely low token floats, and then just having horrific charts, even if they were actually a good product. We've seen a little bit of that this cycle, but I would say this cycle has definitely been dominated in terms of like new token launches, has been dominated by, meme coins, the rise of pump.fun. So I'm just kind of curious because you put out this prediction that you think there's going to be sort of a return to, broad scale token distribution events on day one, and maybe the end of these like really long multi-year vests. I think like you actually mentioned Meg ETH, which I think is a really cool project as well. They did something interesting. They did this like it's almost like a quasi ICO where you sell a lot of tokens through this platform called Echo to I think they have to be all accredited investors, but you can get kind of like a couple thousand. It's almost like an angel round with thousands of people participating. Just kind of curious, like what you see there, and I guess just this like broader thesis of like, fair token launches. What does it look like?
So all else equal, having your tokens in the hands of more people is beneficial because at the margin, it's hard for one person to directly negatively affect the price. You have more advocates for your token, et cetera, et cetera. Now, what's the best way to facilitate that? In the past, it was maybe launching on a launch pad, trying to sell to a bunch of people. That has pretty much proven to be like a token dumping event. So that's out because those folks are looking just for a quick 10x. And then Legion and Echo try to improve on that by essentially tying some social metrics and scoring to that. So like, hey, I have this many GitHub commits. Hey, I have this many followers on Twitter. Hey, here's why I won't dump your project because I have my name attached to it. And then there's the cohorts on Echo, which try to do kind of something similar. That's worked to a varying distribution. Then there's been, hey, let's directly send tokens to people, which have been airdrops. That mostly has been also a dumping event. There have been, broad distribution events that have been more successful, like Hyperliquid was 31%. Kaido just did one with like 15%. Number of others that have kind of been in that 10 to 20% range. But the ones that have been actually successful there have been just the ones with product market fit. So they have a useful product people actually want that they like using or are using anyway and are just getting some tokens because of it. So they're bullish on the platform, so they actually hold them. Airdrops for airdrop's sake or for past activity have been shown to perform very negatively with token price. So it's about generating broad distribution, but having product market fit and getting users excited for something long-term. So, I think this season-based airdrop approach is actually the most effective one where you do, 5% season one, maybe for some early users, 5% for future activity, 5% for the next season, whatever. And you're incentivizing demand over time. You're having users who are actually using your product as you're building out more features. And you're, actually building a fan base with hopefully what is a good product. At the end of the day, these things got to be good products or it doesn't matter. Tokens don't matter. So that's the most effective strategy to date, along with one of these crowd sale type platforms tied to social metrics, but it's very imperfect still. I don't think ICOs were the best method, but they were a method. And the closer we get to some of these broader distribution mechanisms, the better.
Agreed.
Well said.
Yeah, absolutely. Well, we've used up a lot of your time today, Tom. Thanks so much for being so generous with your insights. And thank you everyone for listening through a little bit of political, back and forth at the outset. It's all love between Canada and the U.S. And I agree, Tom. Once this trade war is behind us, it's up only from here. So thank you for your time and for your insights. And we will hopefully catch up when the price of these assets is closer to some of those targets you shared with us. Until then, that's it for this week's episode of DeFi Decoded. Thanks everyone for joining us. We'll catch you next time. Cheers. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.